Hello, Mike Arnold here, co-founder, Pat, trading partners along with Bob Iacchino. So, how we set up our indicator, our other indicators like rotation zone, the moving averages I use. I did one earlier, a few days ago on, how we set up our harmonic retracements and projections, whether I call them harmonics or GANs. So we just have the cash S&P up here. Indicators for the rotation zone, we use two different exponential moving averages. This first one I'm going to do, so I'm coming up to indicators, moving average exponential. If you just click on this, you can type in moving average exponential. I just have it favorited here. Then you're going to want to choose the settings, double click on it. My length I use is the 8. Closing basis style, my preference is to do the line, and let's see what else we want. I think that's about it. If you want it thicker, then we have to come down here and choose the thickness. But that's all you're going to do. That gives you the one end of the rotation zone. So in an up market, gives you the top of the rotation zone. Why do we use the 8? It tested out the best. I mean, if you use a 9 or the 7, even if you use a 10, it says it's an area you're watching for. Exponential also tests out better than simple. What's exponential versus simple? If I put up a simple moving average, you can see here that's that thin blue line. Let me make it thicker for the video. So this is just to show you the difference. All right, exponential weights the price action heavier for the most recent price action, so it moves faster. So you can see the blue is the simple, the orange is exponential, so it turns quicker, it follows the price action a little closely based off more recent price action. You can use the simple, it just did not test out as well for the concept of the rotation zone. That's why we use it. That's why we use the exponential. Next one we use is the 21. Again, if you want to use the 20, there's no big deal. But 21, for some reason, tested out the best, and we're not trying to curve fit or anything. So I mean, you can use the 920 combination. You could use the 821. You could use the 1019. These are the ones I'm using though. Sorry, I forgot to change it. So I make that one blue, and I make the length 21. There you go. That's the basic concept of the rotation zone where I'm watching for pullbacks. So especially on these longer term charts, you can see here, let me take off those old levels. Pull back to rotation zone, rotation up, dip into, pulling back into rotation zone. These are key areas right now. We've pulled back into the rotation zone so far, rotating up. So we're going to watch to see where this week closes, but it did come back down, dipping below the 21, but now closing well into the rotation zone. And again, we're not trying to nail every high and low. We're trying to find the most optimal zone for pullbacks. Next moving average that you'll see on my charts is the 50 exponential, the 50 period exponential, which is always, I use green. And I would recommend keeping your colors consistent, because then you don't even have to, you can immediately just glance at any chart and you'll know what the moving averages are. When whatever market I do, whether it's cryptos, whether it's futures, whether it's stocks, whatever. So there's my 50, which again, we use the exponential. It's just that's used for other support and resistance levels in conjunction with harmonic projections like retracements and the extensions. Then the final one we use the 200 simple. It's probably one of the most widely followed ones, and it sort of has a self-fulfilling prophecy. So it's on the charts. Again, that's the only one that we use that is the simple. So length It's just called the moving average. There you go. Now where is that? That's all the way down here, which we haven't had contact with in some time. But that's a very key level. Some people ask, well, do I use the 100? I will glance at it periodically, but I don't keep it on my charts just to keep the charts simple, because many times when you do start breaking down below the 100, you're just going to make a move towards the 200. What else do we use? You'll see on my charts I use the RSI, the standard RSI. I don't even think I have it up here. Relative strength. No, it's there. Must have missed it. There we go. And I like, as I said in another video, I like the 2, 3, 4, and 5. So my one I use on here. Oops. Now where did I put it? There it is. The one I use on the videos I do is the 5 period, not the 14. The 14 is pretty much garbage. Does not test out well at all. The 5 period tests out very, very nicely for resistance. I just take off the, don't need the middle band. I don't need the shading. The upper and lower bands are helpful if you want. I like, instead of 70-30, I like 80-20. And then with these, again, we're watching for divergences. So that's what it looks like right there. You can make it whatever color you want, of course, but that's what we're watching for. So here you see higher high in price action. Mark this off. You'll hear me talk about divergences a lot. So we have higher high in price action and a lower high. Oh, see, it's diverging. So you have down sloping versus up sloping. So that when I talk about divergences, that's what I'm referring to. I think that's about it of most things I go over on my videos without trying to overcomplicate stuff. And you'll see here in the cash S&P, with this downward move, the rotation zone has become bearish. We do not trade anything like crossovers or anything else, but this is giving us pause that price action is broken down. So to focus on key resistance areas, and you see today it came up, hit the key resistance of the rotation zone and the 50. We break through that, fill the gap. You hear me talk about gaps all the time. That's another thing to watch for. And then the upper end of the rotation zone. Now if we get back above the rotation zone and it's still crossed down, we would be in neutral mode. When we're below it and it's crossed up, we're in neutral mode. When we're above it, we're in bullish mode. And when it's crossed down, we're in bearish mode. But if we pop back above it and it's still crossed down, we're in neutral mode. That's just a guys to keep. It's an easy system I use to just keep me sort of more in sync, that I don't get on one side of the market. So daily, and this would be bearish. Weekly would still be bullish, but pulling that back. And if we close below that weekly rotation zone, then daily would be bearish and weekly would be neutral. So then we'd start watching to possibly short the rallies. That's what I have on for you on how we set up the rotation zones, the moving averages, the RSIs we use, and I'll talk to everyone later. Bye for now.